Hello, September 4th, 2020. We are pre-market, and I'm doing a different video today. This video is not just for the private feed. The people in the private feed know how I spotted this problem, and they know how I reacted to this problem. But those of you in my course, I wanted to record a video so that you can understand what I was seeing. I could not explain it in the main chat. We signed an NDA, you know I can't explain it, and I didn't want to talk about it. So in the chat room, when you see the video, you can tell me you saw it and you got it and you understand, but we don't talk about any details because that's part of the non-disclosure use. So let's start out with what's happening here and what happened. S&P monthly chart. This is an S&P monthly chart. That is not an M bottom. You got to watch the course to understand why. But we had a double top failure. Pretty much everybody buys a double top failure. I mean, breakout people buy. Shorts, of course, place their stop in the most logical spot, right over the top of the double top failure. They put all their stops over these pivot highs, and then the market squeezes them and rips up and kills all the shorts they have to cover, and the market just climbs. And that's been happening since 2013. Since 2013, we broke out of that 1550 double top failure, and we've more than doubled. Okay? Now, what is different right now? What made me on edge in my morning videos to the private feed pretty much every day for the last couple of weeks? That. You learned what a topping resistance line is. This topping resistance line came from 4 of 2010. That's 10 years that we've been watching this market climb up this angle. Now, you know I don't make any decisions or trade based on any one layer, unless it's a perfect gap. But I also brought in a second angle to get in to see that we were spotting the right area. Now, am I thinking short, the top of this angle? No. My thought is we're killing it to the long side when we get up here. Make sure you're scaling, make sure you're careful, make sure you don't have too many new trades on that haven't hit a target, because we're exposed to a really risky area. And there are some other signals and reasons that are in the advanced feed that I don't have here that also confirm this, but this area is important. Now there's other angles I'm going to show you in this, but your first clue is you're up against a massive TRL on a monthly basis. Massive. And it's hitting from 2 years and it's hitting from 10 years. Very extended in that spot. Now we move to the daily chart and let's talk about what I was seeing. When you go over a TRL, these are the topping resistance lines right up here that you're seeing from the monthly and the weekly. When you go over them, if they flip to support pretty smoothly, they can become parabolic moves. I mean straight up crazy moves. This is how a lot of your stocks that gap up on earnings go crazy. They gap over a TRL and they go crazy parabolic straight up. In this case, the market shoved over the TRL. And just like a freight train, it's so bullish, it doesn't stop on a dime right at the TRL. That would be dreamy if it always worked that way, but it doesn't. One lesson that I shared before this happened in the private feed was that they will usually push to an angle right above the large TRL set. They will push it to some extreme above the extreme just to get far enough over that it fools people. And we hit the top of the chain. So on Wednesday, before this happened, I drew the uptrend line. I actually had it in place. And I duplicated it to a channel top. You have a channel top and a sharp angle TRL that's right up here. These two are in the areas between 35, call it 35.70s and 35.90, just in that tight area right there. And I started to notice about I think it was, 35.84 was the spot that I actually had leaned down to. I was wrong, it went like 4 points higher than that. But it rejected off of that area. So that didn't mean that I shorted and nailed the short. I was more worried about backing off on my runners and backing off on my longs because I have a ton from riding up this move. Now, once you reject over a TRL at another extreme above it, that can be dangerous. And you can see what the bar looks like. Gap down the next morning and just slam. Where did it stop? Some of you wonder, why did Randy say the market could stop selling here? I mean, other people were still shorting into the low of the day yesterday. And I said the market can bounce. It was pretty simple. Market came down to the 20-day. Price likes to revert to the 20-day. That's normal. But the uptrend line of that channel, if the channel reacts on this side, there's a chance that it could be reacting on the other side. Was this enough that I loaded the boat? No, the market's getting slammed. I just got done trying to cover up a bunch of positions that are getting hit, and the market hits that support. So at that point, I'm not shorting into that. I'm not pushing my luck here if I was. At that point, I think the market can bounce, and so my runners can likely have a bounce from that area. And what did the market do yesterday afternoon after we talked about that? The market bounced, and overnight it held and bounced further. So we understand, if you look at this chart, what happened here. Now, I've got some work to do. Is this channel going to hold today, or are they going to break the channel and follow through down lower? If the channel is holding, we can absolutely bounce up. Where would we find resistance? Back at the TRL that failed. Back up here at 3,500 and change, just over it, and even can be pushing up further. We're going to have to watch, and I'll let you know as we see it. But let's also look at another view. Let's look at the cues. Now, this chart is a little messy, but I'll explain a little bit about my trading on this chart and what happened here. And we had a pretty bad signal yesterday, so let's discuss. First of all, this was one of my longs. This was the bottom of the BSL into the uptrend line, into here near that 20, which was a long signal for us. Many of you know in both rooms I hedged in this spot when we got to the top of the TRL. And we had a reaction over here where it gapped up and fell back into the range into a smaller TRL up here. And there were a couple of other signals in here, but you can kind of see where that spot was. So it was into resistance there. This became a bull flag. You know I like to buy bottom of bull flags, so you can see when it pulled back to the second bottom, it was a double bottom area at the uptrend line, bottom of bull flag. This was a long. And the last long down here was a downtrend line back test of the bull flag pulling back. That was a long area as well. So a number of signals that were all longs here. One signal to hedge, but that got knocked out at the final runners on that after hitting targets, got knocked out over here. Now, something important happened here. We went above the long TRL. Let me change the color of it, even while we're doing this, just so that you can see it really clearly what I'm talking about. So you have this long TRL, and you look over where it's at, and we popped over that TRL. Did we flip it? No, we ran over it, and look at the accelerated sharp trend line, the angle of that last angle that was up. This is very aggressive. Clearly, every day we're pushing up here, I'm worried about when is the 2x4 coming. Just down, of course I am. I mean, it's extended, we're up, and we're doing an accelerated tight move up against into major resistance. But the moment that CLT from the other chat room sent out a chart showing where we had gapped in the morning, you know I watch where perfect gappers open. This gapped the uptrend angle right off of the open. This was the moment where I knew I had to really sell positions and get fast. And I had a lot of runners to look at to make sure, did I get them down to the 10% last, more on position? Did I move to break even on those that have gone half the distance to target but didn't reach target yet? I don't just sell out like other people. I use my process to keep me in. Otherwise, I would have been shaken out on every one of these moves. So This signal right here was the one that told me, oh, geez, you're in trouble, Randy. It's time to really get down in size, down in positions. So start looking at what is allowed to be cut down, what can be moved to break even, follow the plan and process, but be aware it's time for risk down. Hope that's very clear. You've seen me do gaps to the upside. It's the exact same thing. A rising trend line, gap under, is not good news like that. So perfect, the opening range break of a small pop and then break lower. This was a small risk short if I had the time. I didn't have the time. There were short signals yesterday just by virtue of the way the day opened. So Apple is a very good example of one of the short signals we got from an individual stock yesterday. So let me show it to you so you understand it. It's the same thing I do on the upside. In the private feed, when I'm looking for morning gaps and things that I'm going to trade, this is an example just reversed for a short. So I didn't have the time to even focus on this because I was busy throwing stuff out of the boat, because it was sinking right off the open. But the fact was, if you look at Wednesday's bar on Apple, the low on that bar was 127. Where did Apple open the next morning on this gap down that we were talking about when we got our overbought signal? It opened at 126.97. That's 3 pennies gap below the low. Who is getting hurt by gapping 3 pennies below the low on Apple? Not many people are thinking about it, but the fact is all of the people that bought in these bars right in here, they're trapped. They're hurt. In fact, they're already hurt by them gapping up here and not being able to hold up, but they're even more hurt by virtue of it's gapping under the low. Now, not everybody understands that, but that's what's happening underneath this. Price pushes up. This becomes your opening range right here. That's your risk area. Let me try to draw that so it actually shows, but this area right in here, from the top of that bar to the cross back below the open, is your risk area. That square you're looking at right there, I'm changing the color so you see it very clearly. That's the risk area for shorting Apple on an opening range breakout. It's not a time opening range. It's the range of it pushing up and then crossing back below the open, back below the prior day low, and you now broke lower. And now you just move your stop to break even when you get half the distance, and you're going for 5 times your risk. Why do we do 5 times your risk? Because if I show you the equity curve on 5 times risk, you'll realize that you could be wrong 82% of the time and you're not going to lose money. And I am not trying to be 82% of the time wrong, but I can tell you there will be times when I'm really wrong. So because of that, formula works, math works. But look at what this looks like. You actually have a market that gaps under, which is bad news on the Qs. And then you see Apple gap below the prior day's low with an opening range breakout from the top of the pop back below the open. This was a short. I did not take it. Full disclosure, I did not get this. I was so busy cutting down my runners to 10% on Roku and AMD and just everything. I mean, just knocking them down one by one, trying to get the risk down because I knew we had gapped under on the Qs, which was a bad signal. I knew where we were at from the prior day. We already had a bad signal. And then I started seeing leaders gapping below. So I hope that you use this to understand what's happening in the market. You understand how to read this stuff. Just don't discuss it in the chat room, please, and I hope this video helped.